Good morning, everyone. It is Friday, November 19th, and this is Morning Market Movers, where we look at hot spots in the markets for today and we do some live analysis for day trading. I am Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I jump into the hot spots, and we have some hot spots today, things are moving this morning. I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, there was some news out last night. Everyone's going to be catching it, but obviously the news is, and I don't think it's pretty hard to miss, is COVID is back. Austria went into full lockdown is going into full lockdown starting on Monday, but COVID is breaking out over there. They're shutting down restaurants, they're shutting down retailers, full lockdown. Germany, parts of Germany are going to be going into lockdown next week as well. So what are we seeing? I'm going to call the headline today Dow, dollar, and oil. But you can see here, this was the DAX, the German 30, the German 40 overnight, the German 40 overnight. I mean, you could see there was some volatility, blew through a bunch of binary option levels. But what I really wanted to bring up, because what we tend to talk about more over here, although we do have those at Nadex, the Dow is looking weak. It's getting hammered. Um, there we go. Let's take a peek at what's going on in the Dow. We are down. I think we're down over 1%. 3,400. In fact, let me just take a quick peek here on what I've got. But oh, there we go. All right, yeah. Oh no, the Dow's actually coming back a little bit. It's only down 0.5%. It's only coming, yeah, and you can actually start seeing it. It's actually starting to retrace a little bit here. But we do have the Dow down. Interestingly enough, the S&P also down. But just like it did in the COVID trade, technology stocks are actually up. So it's that whole lockdown mentality. The broader market is selling off, but technology stocks are being bid up. The dollar seeing some strength. We are seeing some dollar strength, and oil. People knee-jerk reaction is there's going to be less demand for oil. Oil is down. So we've got lots of volatility going on this morning. Brian, let's jump into it. We can cover a little bit more of the news, and then let's take a look at these charts, because there is a lot going on
Mhm.
for Friday before Thanksgiving.
Yeah, I mean, the European traders really just dominated this morning. Again, when there's no big, no main body to fight against, it's pretty easy to win the battle, and they did whatever they wanted to do this morning. And really, there's a lot of stories out there playing. I'm going to actually start with one from yesterday. The IMF basically has tagged the United States as posing global risk because of the inflation we have here. It says
That's
basically high
contagious
levels of
too,
U.S.
huh?
Huh?
That's
What?
contagious too.
Yeah, I mean, high levels of U.S. inflation may necessitate more front-loaded policy response, could pose a systemic downside for the U.S. and global economy. So it's not just what we do here. Again, this is where, a lot of times we mention currencies and how everything is linked now. The IMF, kind of a big group. I mean, they kind of know what they're doing. They're basically calling us out by name, saying because of the high levels of inflation here, it poses global risk. Kind of sounds like climate change too, right? It's one of those things where it's like, oh, you're at risk. Well, guess what? Our inflation is carrying over other places. And then we've had a couple other headlines. You know, uh, Weidman talking about how we can't dismiss the risk of excessive inflation and must be vigilant. We're talking about it over here. Governments will put pressure on central banks to maintain policy looser than necessary. Again, everybody likes cheap money. That was the same. This was the same battle that Trump had with Powell a couple years ago, right? It was no, it needs to stay low, and he's like, no, we don't need to listen to what you have to say. That whole battle back and forth. Governments love cheap money. They're saying that inflation rates will probably take longer than previously projected to recede. Kind of that transitory thing, going to take a heck of a lot longer. But then we got this, right? Lockdowns. Like, wait, what?
They're
Lockdowns?
back.
that was like so 2020. This is 2021. What are you talking about? Um, but Austria
Hey,
going to full lockdown, and I did check Austria. This was the first question I said. I was like, I wonder what percentage of the population is vaccinated, and it's actually 65%. Um, Better than the United States, and they're going full lockdown right now. And then obviously parts of Germany, when asked about the possibility of full lockdown, we're in a situation where we can't rule anything out, which kind of means like, yeah, if we need to, we will, right? Well, the United
and
States is
just
at a level where we'll go that full lockdown again. It was too detrimental to the economy last time. I don't think we'll go there again, but large nations. Now, what
I
does that
will
have to do with the
also
markets
toss
today?
in. I just want to
Yeah,
toss in
I
because
mean,
I saw that Johns Hopkins came out. It's
yeah.
happening here in the states too. So
Hmm?
at some point we may get our hand forced.
Yeah, and actually, I mean, it was expected. That's the thing; they're expecting that we're going to have a stronger flu season this year, which obviously yes, because last year we didn't see anybody in the winter time frame.
Right.
So yes, there was only like 18 cases of flu or something like that in Maryland. It was ridiculous because you didn't see anybody. This year, people are seeing each other. The flu still exists; it hasn't gone anywhere. Regular, I mean, I'm still coughing. Regular things still exist. They also said COVID will probably be, we'll see a spike this year once we're adjusting back to indoors, because again, when you have more contact with people, and remember, the vaccine is not preventing it, it's not keeping you from spreading it. That this is where all the great debates about whether it's a vaccine, not a vaccine, all those things like that, because people are still able to get it. Obviously, there's pros and cons on both sides that people believe, but the reality is it's not going anywhere. We'll never have COVID zero. But when you're talking about lockdowns 2 years into this, that's kind of a big thing. Well, the markets
Yeah.
did not like this whatsoever.
No.
Doesn't really matter what chart you look at. I mean, we'll look at the S&P 500, right? We talked about 47.25. I mentioned it earlier in the week that we'd get close. We got to 47.23. I missed it by 1.75. 2 o'clock this morning, you would say, who the heck's trading the ES at 2 o'clock in the morning? The Europeans threw this into a tissy, straight down. And again, we're coming back into levels now where we do have some buying. And again, again, remember, this is not a US based problem. Um, the big issue is going to be, and this is where the media may take this, if they shut down Germany, Germany's industrial powerhouse, is that going to affect the supply chain? We're going to go right back to the supply chain thing, even though, we've heard, retailers say, I got plenty of stuff on the shelves. So, I mean, at this point, if you don't have your Christmas toys out, it's too late at this point, right? I'm pretty sure, I mean, Sam's Club near me has had them for a month already. So, pretty sure everything that's in is in. So ES has dropped. NQ, the exact opposite. You can see that NQ took that spike. And actually, NQ, here's the 2 o'clock window for NQ. It didn't react as much. It kind of held. And remember, NQ is kind of the COVID safety index. Reason why is because, again, if we're forced to lock down, we're forced to get back on computers, we're forced to do more technology. Um, and I would say right now, I mean, obviously we're not trading individual stocks, but think about the stocks that did really, really well last time with lockdown. Those could be ones to watch today. And again, the associated indices. YM, YM blew through some major levels. Same thing. 2 o'clock this morning, off to the races. You can see there was a little bit of a hiccup at that old level, that old short that we had before. I'm sorry, the old area here that we had. We got that bounce before. This time it gave it a little bit of resistance, but not much. If I continue the line across, you can see we sliced through it, came up, and then started the base in it. And the question is, now with these ascending wicks, has the bottom been put in, and YM will we start to rebound today? Again, profit taking from the European session, and again, the U.S. trader saying, "Hey, you're not sending our markets down. Our markets are going to go back up." Again, it's a common thing that we see. And then Russell, same thing. And again, we had that old prior trade here. You can see that it actually did spend some time. It blew through, based, and then dropped down again. Again, obviously, there's some buyers sitting down here at this lower level, probably around 123, 129, 123, 25-ish area. I mean, it's held it twice, so there's somebody down there. Otherwise, that price would continue to drop lower. So, indices today overall, I would say, I mean, none of this news is really affecting us. Canada had good retail sales numbers. Good. I mean, negative, but not as bad as what they thought. That's kind of what we expected earlier in the week. We got a couple speeches today, but besides that, we're going into a Friday, and this may be a day where it's kind of like, oh, look, the European Union is kind of they're messed up, but we're good here, right?
And that's interesting because our retail earnings too have just been strong all week long. I mean, everyone's been blowing it out. People are shopping.
Yeah,
People are
all retail
spending
sales are
money.
good. Hmm.
So it's interesting that our inflation is contagious globally, but
Hmm.
their COVID responses seem to be contagious to
Right.
us coming the other way. We're trading different
Right.
different things.
Right. And I mean, that's very important to bring up, Todd, too, because if we're not going to have the same issues, we still want goods and services. Right. And if our inflation is high, which everybody knows that it is, I mean, there's been a couple of articles about, oh, big paychecks do equal inflation. We all know it's here. We're accepting inflation this level. Well, people in Germany and the EU, they want the goods and services too. But the difference is if they have to pay for them, guess what? They got to compete with us. So our high inflation, they still have to buy them. And with the European Union that's getting, again, seeing things like COVID, the euro is going down, which means for them to buy things from other nations are also getting more expensive. So it's even higher inflation. So
Yeah.
this is how like everything's kind of interlinked, and again,
In fact, that's actually good. Let's jump over to a couple of those. I mean, because we have some things to talk. Let's take a look at some of those currencies because we got the euro going one way. We got and
yeah, I
there's
mean, here's
reasons
the
for
euro
that.
yen. Yeah, I
Oh
mean, the euro yen did the same thing at like 2 o'clock. This thing was just off to the races to the downside. 203 pips. Now, the daily ATR on the euro is 78. So it's almost 2.5 times what it normally does. In an entire day, it did it in, but really from 3. So we're talking 6 hours. So in 6 hours, it did 2.5 days worth of movement straight to the downside. And again, remember, December is when all the strategic quantitative easing is supposed to wrap up. And now we're seeing comments. Where is it? I just saw it a second ago. Is it manufacturing? Yeah, Brexit throwing this back in there again. I forget where it is.
That's a whole other thing we haven't even talked about. There's so much going on today.
Yeah, and they basically said that they don't see a rate cut in the European Union in 2022 because of everything going on. And it's kind of like, wait, what? The United States is talking about 2, maybe 3. The pound is talking about it next time, like it's guaranteed in December. Is what they're saying. So now the EU is saying no, it's going to probably not till 2023. It's going to be an entire another year that
I don't
we're
know
going
if
to
they
have
could
to go
do that.
through.
If everyone else starts raising, that's going to cause. I mean, that's going to be yikes.
Yeah. So, but again, that no difference. Euro dollar, same thing, dropping down. Now the euro dollar had these two bigger levels down here: 112.44, 111.74. Both good levels of buying, and you're seeing it retrace a little bit. Those are major currencies. Obviously, dollar yen, kind of the same thing. You guys can see that this came up, and the spike was right around 4 o'clock. We mentioned this level, missed it by just a little tiny
Didn't
bit
quite
on that
get
one.
there.
Yeah, yeah. It's like by like I think it's by like 0.6 of a pip. Not even a full pip. I missed it by.
The wick is there. It's just shy of it.
Yeah, so close. It's you put these orders in and you're like set and forget, and you wake up and you see the price, you're like, yes, and then you get it here and you're like, oh, really?
Nah.
So it's close, but I would say there is a Harry Potter down here. Again, if we're doing a little bit of basing now with the rollover of time, there could be a potential trade in there. Again, the pound big, but it's starting to retrace back again. And people may say, well, wait a second, why is this dropping? It's retail sales. Well, good, you're right, but I believe that everybody. Two things. One, while 0.8 is better than 0.5, based off of the numbers we've seen in other countries, it should have probably been a little bit higher. And I believe that the market, oh, there it is right there. Rate cut, unlikely. I believe that everybody expected over 1% on that one, as well as the Article 16. Like last week, it was like, no, we're not going to do Article 16. Now Frost is saying, hey, it remains on the table. It's like, wait, what?
He's just
Really?
wants to keep that card in his pocket, doesn't he?
Yeah, there's significant. And here's why. I hate to say this, and like I don't want this to come off wrong. There's still significant gaps between the UK and EU. The EU is now locking people down. Are they negotiating from a point of strength or weakness? Last week they were locking it down, and Article 16 was not on the table. Now this week they're locking down 2 nations, and it's no, it's still on the table, guys. We still don't like it. We can get a better deal. And it's like just go by the original
when
deal.
He's got him over the barrel, he might as well see what he can.
Yeah, see his face. That's exactly. I don't know if you guys can see this or
smirk.
not. Yeah. Can I get it over enough? Oh, I can't. It won't let me do it that way. Yeah, I was gonna say. Look at his face. See his face. That was kind of the same face that I saw when I read this. It was like, really. So yeah, so that's on the table as well. There's just so much out there today for Friday. I would expect there to be some retraces, and again, this is a big deal. It's the rate hike is unlikely for 2022 as it slides. It says banking stock dipped around 2%. Yeah, so must not rush into premature tightening.
Yeah,
I mean, 30-year record inflation. Yeah, and again, in her defense, for people that don't understand this, If they keep the euro very, very cheap, you know what that does? That helps nations become better exporting countries. Because why? If the euro is cheap, it's very, very easy. It's cheaper to buy things from European companies because the euro is cheap, right? The problem is the inflation aspect of it. And again, it's a they're kind of threading the needle. If the rest of the world is raising interest rates, trying to curb inflation down, and they're not seeing, and if it's not getting too crazy out of hand because of some lockdowns, it will help them. It'll benefit. But again, it's a very, you know, it's
That's
like
a double-edged sword.
it's drawing circles around a fire with gasoline is what it is. It's like
Yeah.
maybe it won't catch, but it's kind of a dangerous scenario. And again, something as big as the EU, and this is where the EU's problems show, because the rest of the EU could be doing great, and one nation, and again, Germany is a very, very, very big part of the EU. One nation, everybody else is, has the issue. So, yeah, very interesting times today. What I would say, guys, there's been so much movement. I mean, looking at kind of what's moving, what's not moving. In the indices today, I mean, NQ obviously is still holding up a little bit. I think that is going to be, if the markets turn and roll, I think NQ would probably be the way to go. ES, it's down a little bit, but I would say right now, again, typically US, the US is not going to love this. YM, kind of the same thing. YM finding some levels, and Russell as well, kind of taking a bounce off of a level here. As long as the media doesn't start at 9:30 today with, oh my God, we're all locking down again. As long as we don't start with that today.
They don't. Now, there was one other thing before, because I know, and we're going to go a little bit long. Oil. Oil got clipped. I mean, they're locking down. Demand's going to go down, and it's
exactly what it is. Yep, exactly the same thing, right? And again, you can see yesterday we had that very compressed session. We had that kind of spike up and down. 4 o'clock, same time everything else. The chart looks exactly the same. And this is why I always say a chart is a chart is a chart is a chart. It tanked all the way down. Do I love $75.89? Is it $10 cheaper than it was
a week ago?
A week ago?
Yeah.
Yes. Is your price per gallon going to go down $1 because it went down 10? No. Is it going to drop 5 cents at the pump? Maybe.
No.
Maybe if we're lucky. Right?
Hey, we're gonna get that discount gas. They're gonna drop it 1/10 of a penny. And instead
I'm gonna go from I'll go from 325 to maybe 322 is what it's gonna go to. Even though it's been down this much. Gotta love how that works that way. But also remember, this is a very, very, from the trading session start, from here down to 8:30, this is quite a large move in oil. This is $3.69. Looking at a daily ATR on this one, you're looking at $2.50. So it's almost 1.5 times in just the European session. Remember, oil is the U.S. baby, right? So again, we head straight down. Typically, we tend to see when it's this big of a move, and again, if you threw Bollinger Bands on this one, and I'll just do it real quick, because again, I always love to have a little bit of fun when we can here. Bollinger Bands.
Right.
You can see that we have not only pierced, we have taken this thing and just shattered open like a clam. So again, we're having this pierce. Remember, I do believe in the reversion of the mean. I do think we will have a bit of retracement. Can it go a little bit lower? Sure. Again, the media is going to have some control over that one today. But I do believe that when the U.S. trader steps in, they're going to talk about how everything is great here. More earnings were good. Yes, Europe is again having some problems, but we're rocking forward here. And again, I do believe that it is justified to go higher today. Finding the bottom is going to be the big call. And again, at the open is where we'll find that one. Remember, it is a Friday. And again, the reason why I say this is in preparation for next week. Next week is a holiday week. People travel. Thanksgiving is the most travel friendly holiday. It's when most people travel.
Right.
With some COVID contagion, is it better to drive or sit on an airplane with people? Probably drive. So I would expect this year, now that we're not being told to skip Thanksgiving and stay home, I would expect that it's going to be a big week for gasoline and oil. So, having price drop down artificially on a Friday because of some news could create some really great opportunity, especially, and I'm going to say this right now, guys, Sunday night, right? Sunday night, oil is after today. Remember, there happens to be a product that lasts multiple days, right? Multiple days.
That would be those knockouts. You know what? We'll take a look at those on Monday, and I'm glad you actually mentioned that, because Brian and I will be back on Monday. We'll be doing this on Monday, but there are times, and especially after the last couple of years, that we want to take the opportunity to be thankful for what we've got. We won't be doing this Tuesday, Wednesday, or Friday of next week. We're
Not
going to
Thursday
be,
either.
well, Thursday is the actual holiday.
Not Thursday either, Todd.
We won't be, yeah. So Brian and I will be back Monday. We will talk about what's going on, and we'll try to give you some ideas and setups for the week. But we won't be doing this the balance of next week to take an opportunity to be thankful. And I think it's
The
important that we all, you know,
I was gonna say
take
the truth
stock. It's
is
it's an
the
I
truth
do
is I
like
ate
this
too
American
much.
tradition.
Yeah, the truth is I ate too much of the kids' Halloween candy. I'm at like a high weight right now, so I need to do nothing but work out for 4 days before Thanksgiving. I got to get ready for that, Christmas cookie season. And, I'm higher than what I normally am this year, so it doesn't.
I love
When
it.
when I have 3 kids trick or treating, Jen can't have a lot of things, so I just eat all her candy, and I'm like, my God, Melissa, I weigh so much. I'm working out all next week. Every day I'll be out running. That's what it is.
That's
That's why we're not going to be here,
the
guys.
price you pay for your children going trick or
I know.
treating.
You want a better life for them, so you eat all their Halloween candy. That's how it works.
All right, I love it. Um, with that, any questions for Nadex about our products, our markets, the platform? Please email us customerservice@nadex.com. We're here to help. Brian is also available, so if you want to chat with Brian or have any questions for him, you can email Brian at support@keeptradingsimple.com. Today was a lot today. It's going to be a busy Friday. We want to give everyone, and we went a little longer today because there was so much to talk about. But yeah, I called it the Dow, the dollar, and oil at the headline, but it's the equities with the what's going on in Austria and parts of Germany. We had a COVID reaction, a COVID trade, where uh, the broad markets selling off, technology on the other hand holding up. And so we're seeing that over here in the U.S. with the Dow and the ES and the Russell all going lower, but the Nasdaq going higher. We're seeing dollar strength. We're also seeing euro weakness. So lots moving in the FX markets. And then oil, a knee-jerk reaction. Oh, there's going to be less demand for oil, and we've seen a sell-off in oil. Lots of trading opportunity today. Check those shorter duration binary options. Looking for catch some of those moves. You can also check out knockouts and call spreads. I think everything settles up today, but we'll
Hmm.
take a look at some of those on Monday for potential trades for next week. With that, good luck in the markets, everyone. Enjoy your weekend, and Brian and I will catch you again on Monday. Thanks, everyone.